Hey everybody, Dan Hellweg here at Properties Real Estate North Center in Chicago, and happy Monday. So with that being said, it's Market Report Monday. We're going live with this guy. We'll give everybody a couple minutes to come on if anybody wants to come on. It's a little bit later in the day, but we'll probably just kind of dive into things, right? Kind of get started. I got some balloons in the background here. I didn't really check my environment before I went live, and I'm really glad that nothing crazies behind me, but I guess that would have been kind of fun. Anyways, let's go ahead and get started, right? I over the last few weeks, we've really been watching the rate number, right? It was hitting about 6.25, 6.5. It has actually increased again. So we've been hovering around on average almost a 7% mark. I'm not completely worried about that. I'm not entirely freaked out or anything like that. My thing is, I just want to see it kind of stop at that. If it comes back down, which I do believe, all lenders, everybody in the market, seems like a lot of people are saying that it will, decrease again. The challenge with that is timing. Here's why. I don't like to see that number increase at this time of year. This is the time of year where there's a lot of motion. Typically, this is where people are debating about selling, where they're, going to the market. We have our buyers out there that are looking right now. Again, it's not detrimental to anything, but it does kind of pump the brakes on some. You do have some people who were expecting maybe that rate to hit the fives. I had clients that have closed up. I've had clients who have, locked in rates, and there's a five in front of it. I love that. So, of course, my current clients that are on the search, clients that are thinking about buying or thinking about selling too, I'm not worried about that seven. I don't like it, but we'll have to position with it. So if we're buying, what are we going to do? Well, we're going to make sure that we're getting a really great, price, hopefully. That's not going to be in all cases because there's going to be that property that hits the market, has great value in it, right? Maybe it's turnkey, maybe it's got good equity, maybe it's, however it's positioned. So we might have to position ourselves with our offer a little bit differently. Seller might not be willing to concede as much, especially if it's brand new. But look, again, we're not looking at it from just a singular individual moment. We're looking at it from the longevity of how you want to own it. So if it is a position where you do need to put some value into it, what's that going to cost? What's that return looking like? What's the after repair value looking like, right? So again, all things were taken into consideration. So looking through my common stats that I like to look at, again, this is just the whole area in general. So we are taking some things into consideration. We are going to base it in, of course, the properties that are flying off the shelves in the suburbs, because maybe there is only one property, or maybe that gem in the city that, is a single family home, up in Andersonville or something like that, because there's nothing really available. I hate to say, I don't mean to say there's nothing available. It's just at this very singular second, if you were to go look right now, are you going to find exactly what you're looking for? Maybe not. So you have to be patient. We'll have to see what's out there. But here's where I was going with that. And I'm going to pull up my stats really fast. The overall, and I like to always kind of, sell or communicate, show off the other items too. Closed listings have decreased a little bit. Now, closed listings is, I always have to put that caveat in there. We do have to remember those are things that went under contract, December, January. So about 30 to 45 days out, at least, if not more. So I don't like to see that decrease, because if I dive into it, I have to see why it decreased. Did it decrease because the rates, did that bump out people? Are there failed listings? So of course I can kind of dive into that on a, macro level, but it really comes down to micro level, depending on what your search is, the area you're looking in. We like to kind of have an idea of what those listings are, because here's why. Here's why this is important. If there is actually more coming back to market or returning to market that were under contract for those kind of reasons, we have to understand what that seller is expecting, right? They're expecting probably a similar deal. Depends how fast they went under contract to get that deal. Now, if it was instantly and then it died out because the buyer unfortunately couldn't get the rate that they needed or the loan that they needed, they're expecting to get probably something similar or comparable, right? So we want to take that into consideration. Again, nothing too worrisome. I don't want to see it come crashing down. But again, and then if anything, here's the next number, the number that's under contract. That's been pretty healthy all around. I like to see this number has decreased a bit, and again, to be expected. It's been pretty average, though. It's always kind of increased a little bit. For this time of year, I'd expect that. But that's important, again, because now remember, now this is the ones that just went under contract. So these are the ones that will be closing in about 30, 45, 60 days, right? So if anything of those start to suffer a little bit, then that's where it's going to be like, well, what made that happen? What was that decrease? Because you did have an increase in under contract. And another one of my key stats, then of course, are new listings. New listings have decreased. They're back to, like, say, the first few weeks of January and February numbers. So again, nothing worrisome. It's still an increase overall. Last week was, or about mid-February, the 13th through the 20th was one of the strongest weeks. That's fine. So again, that number correlating to what's under contract. Again, it seems like it's a bit of a or a bit of a shift. So that could be a few things. And I think most importantly, it's going to be that rate because it's getting back to around 7. People are feeling priced out. We're really on that threshold. It's very, like, if you run the numbers from a 6 to a 7, it does feel somewhat significant to people because the thing is, they don't know when they're going to refinance exactly. They don't know if it's going to be, within the year still. They don't know what that rate's going to look like. So the thing is, what's most important right now for most people is going to be affordability. Can you afford that home right now? Do you need to move? Here's the other. Now, remember, as I'm saying, here's the thing. There's a lot of things in this right now. A lot of people's leases are going to be up. So April, May, June, July. So we're coming into the rental season. Are people going to stay renting for another year? Are they looking to move? I know my pipeline is a little bit balanced right now. I do have some people who are like, I don't know what I really want to do. I don't want to have a 7% rate just because of what I've saw in the past couple of years. That's fair. I get that. But again, let's position ourselves. We have to ask ourselves, what are we looking for? Where are we looking for it? How much are we looking to spend? What is our monthly expense? And then, of course, what will that look like in a few years from now? And are there some other opportunities? Certain ways that you could pay down your mortgage a little bit quicker, right? Take off a little bit of that principal. Because then when you go to refinance, and then hopefully the equity is up a little bit if you put some work into it, or just the market increases a little bit for whatever. Not that we're expecting that or relying on that. But if it does, then again, when you refinance it, the way you're going to be able to have a little bit more money baked into that, a little bit you can pull out, a little bit, again, with a decreased rate, it's going to feel pretty good because then I think your payment's going to decrease, which is great. Other than that, things that we're watching for, again, just kind of what the motion of the market's doing overall. There isn't anything super significant that I'd say is really playing into it. I haven't seen any major economic shifts, which is fine, which is great. A few things here, obviously, in the stock market, but again, I'm not always worried about what stock market's doing because that's a whole different game. And that's why I always believe real estate and the stock market, both markets should remain separate. It's very, very important. That's why some of these companies that do these online buying programs and flips and stuff, and they're dependent upon what's going on in the stock market, not great, or stock price. But again, what we're trying to watch for here overall is just the overall health of the economy, which has been overall still stable. We're going to see what the spring market, the true spring market, I'm talking about spring weather, people that may have been holding out a little bit, March, April, May, June people. We're going to see what that brings. We're going to see what the rate continues to do. Again, staying at or decreasing will be good. Anything that starts to go higher is going to put a little bit of uncertainty and doubt into sellers. We can't have that. Buyers can work with that. Sellers, again, they don't want to release whatever they're sitting on to go buy a home, to put more money towards interest, right? Especially if they don't have the money for the down payment to offset some of these costs, and come in with a little bit more principal knocked down, to have a less payment for monthly payment, those kind of things. So a lot of positioning going on. You're going to talk to people that are going to say, like, hey, I sold my home ridiculously fast. You're going to talk to people that say it's out on the market. Really depends on where you're still trying to sell, when you listed it, how much you listed it for. You don't want to be the stale property within the search. So make sure you keep it fresh. So again, if you're looking to sell, I can give you a good strategy, a good plan of what we're going to do, how marketing is going to look. Always, as I'm talking about, for buyers, what we're going to do, we're going to make sure that we can get a property that's going to be within your means, within your monthly payment plan, all that kind of stuff. So always, any questions, just let me know. Under 10 minutes. I was hoping to remain in that. Always appreciate all the feedback received, and of course, any questions. And go ahead, refer me out to family and friends if you have anything, and just keep an eye on these, and we'll see where the market continues to go. Thanks, guys. I hope you enjoy this week of Market Report Monday. Again, Dan Hellweg at Properties Real Estate. Thank you.